Hello there. Trade number 2. This is a long-term trade and something a bit different. Just like US dollar yen, future trades will have a lot more technical analysis when it comes to entry and exit. It just happens to be these first 2 trades are very unique in the fundamental side of things. I'm looking to buy Turkish lira against the euro. Why the heck would you buy this thing? Look at this downtrend on the weekly. I think it's time for some upside, or at least an end of the Turkish lira selling, and we could see some sideways price action. This is a carry trade opportunity. Interest rates are super high, 50% in Turkey, whereas the ECB are likely to start cutting rates sometime soon. I have considered other crosses, other currencies against the Turkish lira. I think euro is the best one because of the correlation between the two, and also because of the potential rate cuts that are coming, and their interest rates are slightly lower than the US and the UK, so that carry trade is just slightly better. This is a high risk trade. This chart could continue to fall and the lira could fall to zero, or pretty much near zero. So it's a very wide stop loss. I'm looking to risk £100 again, and the £100 will be to zero. This is a long-term trade. If this thing plummets to zero, I'll only lose one risk, I only lose one position, the £100. This is not a pair that this is not a trade that if price keeps downtrending, that the losses are going to accumulate. This is just the £100 I'm risking. We have to manage risk. Take this away, make a note. Managing risk, or eliminating risk if you can, but managing risk, reducing risk is really one of the key fundamentals to successful trading. So my risk is going to be £100, but the carry trade, the potential upside, makes the reward hopefully very large. So once again, I've been very detailed in my analysis. Turkish lira against the euro, it's the 30th of April. I'm going long. What's the fundamental analysis here? This isn't just based on a carry trade. A carry trade by itself is not enough really to enter a trade. This is based on a monetary policy shift in Turkey. So for a long time, interest rates were not going up in Turkey. There was this unorthodox approach to monetary policy. Inflation is super high. Interest rates need to be high. They haven't been. That's one of the main reasons why this thing has been downtrending for a long time, over a decade. That could be shifting though. Interest rates have gone up. They're staying up, or they are up for now. Hopefully they stay up. Otherwise I'll close this trade down. Interest rates are high. They've also got much more reliable, conservative, orthodox ministers and people in place to manage interest rates. I don't want to go into this in too much detail. This is not a video about Turkey and the issues they've had there from a financial perspective. This is about a trade that I'm taking. Obviously, feel free to read through the document. Usually there will be some technical analysis here. Like on the 4 hour, there's this trend, there's this support level, I'm going to buy here. Once again though, this is not a technical trade really. This is a carry trade. But there will be technical trades much later on. Most of my trades have as much technical analysis as they do fundamental analysis. So please bear with this series. As mentioned, this is quite a unique trading opportunity. If Turkey becomes unorthodox again in its monetary policy, I'll close the trade down. If they start bringing interest rates down too quickly, too sharply, too soon, I'll just have to exit the trade with the loss. But the aim is to catch a long-term trend, or at least for price to move sideways for the next year or 2 years, and me to benefit from the carry trade. So risking £100 results in a carry trade of about £50, about 50% return per year. Okay, so I'm looking to make about 50% return per year on this trade using my CMC Markets account, and we'll go through that in a moment. Anything else to mention here? Not really. There is this at the bottom. Will I add to the position? Yes. So if things do start turning around in Turkey, which I'm hoping they will, which I'm forecasting that they will, and we do get that uptrend, I'm happy to add to the position and start buying Turkish lira. Have I considered other crosses? Yes. Am I trading against the trend? Yes, I am. I shouldn't be. I shouldn't have traded against the trend with US dollar yen either. But these are quite unique trading opportunities. US dollar yen was an intervention trade. This is a carry trade. Does the trade have an obvious fundamental bias? Yes. Is the trade rush? No. I've been thinking about this for a while. So here's the weekly and daily charts. Okay. So let's bring up my CMC Markets account. I've still got a trade open, US dollar yen. It's a position that I'm in. Turkish lira against the euro. Let's add this to my platform here. So I'm looking to buy. Okay, the minimum is 50p per point, and my stop loss is set at 88 here, which is pretty much zero. But if I actually put it to zero, it's £144, so it's slightly over if the Turkish lira goes to zero. Okay, take profit for £1,000 is up at 22 here. I'm not really interested in that at the moment. Let's just put it up here at 42, maybe even higher, just get it well out the way. Now the great thing about this platform is if I click this arrow here, it tells me what my holding cost will be day to day, week, month, 3 months in a year. So in 3 months, this position will earn £12.38. Okay, not a huge amount of money, but it's a carry trade opportunity. £50 per year, £50.24 per year. And if we get the upside, then that's obviously where the big profits will come. This holding interest, this carry trade, this interest, this swap rate that I will earn will complement the trade. Okay. 50p, stop loss, take profit. The margin is so small, so the other reason why I wanted to get into this position is it's not going to impact any other trading opportunities I want to make. I can hold this thing for a couple of years maybe, and it's the margin requirement is so small I'm not even going to notice it. So let's open that. Okay, that's now open. If prices fall further, would I consider buying more? Maybe, but obviously then my risk is increasing. You know, I want to risk £100 per trade, not £200 per trade, but we'll see how this goes. So that's my second position. US dollar yen was a great success. let's have a look at that. So if you've missed the last video, I had a great trade on US dollar yen. Some of the position is still open. If I bring up the history, okay, and we look at the 29th. So I started this challenge yesterday, it's 29th to the 30th. Bring this across. Let's just do close trades only. Type close bet. This is the trade from yesterday, £583 from US dollar yen. If I include buy bet, then my Turkish lira euro trade also shows. I'm trying to show transparency. If I put sell bet in, you can also see my opening US dollar yen. There's been no other trades, only those two trades. So I started this on the 29th of April. Hopefully you've been following this from the beginning, so this all makes sense. If not, go to the beginning. Okay, second trade open. Looking to open another. Happy with how things are going at the moment. Any questions? Use the comment section below. I'm here